Ladies and gentlemen, good day and welcome to the Indian Railway Catering and Tourism Corporation Limited conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Jain from Dolat Capital. Thank you and over to you, sir.
Thank you. Good morning, everyone. On behalf of Dolat Capital, we welcome you all to the Q1 FY’25 conference call of IRCTC Ltd. And I take this opportunity to welcome the management of IRCTC, represented by Mr. Sanjay Kumar Jain, who is CMD of the company, and he also have along with his other director of respective department. Over to you, Sanjay ji, for taking the proceeding ahead.
Thanks, Rahul. Good morning, everyone, and a warm welcome to IRCTC earning call for the quarter ended June 30th, 2024. At the outset, I am pleased to share with you all that your company has been upgraded from Schedule B to Schedule A company by Government of India based on our past performance. It will strengthen our organizational structure and is a precondition for taking up company to a new level, that is from Mini Ratna to Navratna. Yesterday, the company has announced its financial results for the first quarter of 2025 and the results has been disclosed in both stock exchanges. I will begin with the brief overview of our Q1 25 performance, following which our Director of Finance and CFO of this company will provide a detailed analysis of our business segment performance. Afterward, we'll open the floor for the question-answer session. I am pleased to report that Q1 FY’25 has been another exceptional quarter for our company, with an all-time high profit of 308 crore. This represents a growth of 8.2% on Q-on-Q basis and a significant increase of 32.5% year-on-year basis. The catering and rail neer segments were the primary drivers in Q-to-Q comparison, wherein the profit increased by 68% and 27% respectively in catering and rail neer segment. This performance underscores the strength and potential of the business areas. Similarly, on Y-to-Y basis, the bottom line of all the segments except tourism has grown uniformly. Our EBITDA for the quarter also reached up to 375 crore, marking a 9.32% growth year-on-year basis and an approximately 3.38% on Q-to-Q basis. EBITDA margin has improved to 33.47%, up from 31.41% on Q-to-Q basis and flattish on year-on-year basis, highlighting our operational efficiency and effective cost management. Overall, these results underscore our company's strong performance and resilience. We are committed to continuing this positive momentum and delivering sustained growth and profitability in the coming quarters. With that, I conclude my opening remarks and hand over the call to our Director of Finance and CFO, Shri Ajit Kumar, to provide further insight into the financial and segmental performance of the company. Thank you very much.
Good afternoon, everyone. I hope you and your loved ones are in good health. I'll begin with a brief overview of our quarterly performance, comparing it to the previous quarter, followed by our question and answer session. The quarterly performance, the Q1 FY'25, we have achieved another quarter of robust growth with a profit of rupees 307 crores, reflecting an 8.2% quarter-over-quarter and 32.5% year-on-year increase. This growth was primarily driven by our catering segment, which, despite the relatively lower margins, made a significant contribution to our overall revenue. Now the business segment highlights. The first segment, internet ticketing. The internet ticketing segment continued to demonstrate resilience, especially with the transition of reserved 2S tickets back to unreserved tickets. In spite of the fact that we are nearing saturation with almost 84% of tickets now being booked through our portal, and we understand that there is a very incremental increase will be there, but still we want to continue with the same revenue growth. The segment reported revenue of rupees 329 crore, reflecting a 13.4% year-over-year growth, with a slight quarter-over-quarter decline of 3.9% attributed to the typical seasonal peak in quarter 4 when tickets are booked in advance for the upcoming summer season. Additionally, advertisement income from sources other than Google and Facebook, categorized as part of other non-conventional income, decreased by rupees 12 crore compared to the last quarter. In spite of that, the EBITDA margin remained robust at 82.76% compared to 82.73% quarter-over-quarter and 80.34% year-over-year, underscoring our strong market position as well as operational efficiency. The next segment, catering. Our catering segment maintained the strong growth momentum, with revenue rising to 559 crore, an increase of 5.3% quarter-over-quarter and 17.1% year-over-year. While the EBITDA margin moderated to 13.94% compared to 8.75% quarter-over-quarter and 14.61% year-over-year. This segment's revenue growth underscores the increasing demand and our ability to scale the operations effectively. Now next, tourism. The tourism segment saw a decrease of 38.1% quarter-over-quarter and 12.4% year-over-year, with a revenue of rupees 124.8 crore in Q1 FY'25. This subdued performance is due to the non-operation of state Tirtha trains and Bharat Gaurav trains in quarter 1, primarily due to the general parliamentary elections in April and May 24. Despite this, the segment remains resilient and shows potential for future growth, for which we are taking suitable steps. Rail Neer. This reported steady revenue of rupees 107 crores, marking a 34.4% quarter-over-quarter and 16.5% year-over-year growth. The EBITDA margin remained stable at 12.1% compared to 12.84% quarter-over-quarter and 12.65% year-over-year. Notably, our absolute EBITDA increased by 27.4% quarter-over-quarter and 11.9% year-over-year, showcasing our efforts to enhance profitability by expanding our capacity utilization as well as adding the new capacity. Now, the overall our Q1 FY'25 results highlights a successful quarter of growth and a strategic execution. We remain committed to building on this momentum and delivering sustained value to our stakeholders. At the end of FY'24, the company's cash and bank balances stood at rupees 2,908 crores with a net worth of rupees 3,538 crores. This concludes my remarks. Now we can straight away move to the question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. The first question is from the line of Deepak from Sundaram Mutual Fund. Please go ahead.
Yeah, thank you. So I have a couple of questions regarding your catering segment. So that as per your annual report, the income from your premium trains, Duronto and etc. stood at 1,000 crore. And you mentioned in the annual report that in FY'24 you serviced around 51 Vande Bharat train. So that out of this 1,000 crore, how much would be the revenue generated from Vande Bharat train and in FY'24?
Roughly 12%.
Okay. So in continuation to that, so FY'24 we ended our catering EBITDA margin at around 13 to 14%. Now, would the Vande Bharat EBITDA margin, would it be similar or would it be, let's say, 200 to 300 basis point higher than your overall margin?
You see, so far as premium segment is concerned, we have already introduced our cluster system as I told last time, and this is giving confidence to our licensees to share more revenue with us because it's a long-term contract being given to them, and a couple of clusters we have already finalized and some of the clusters we have already offered live. So generally it should be on the same range, but in the time to come, more and more Vande Bharat trains are coming. So premium trains are certainly giving us a better revenue than the non-premium trains. So I am very hopeful of getting more and more percentage of revenue while the number of trains of prepaid trains increase.
Okay. So sir, then margin should also see even improvement, right? With this premium train revenue getting added.
Actually, you see, if you see this segment, then mail express and the prepaid trains, there are two kinds of trains. So here in the prepaid trains, you have an assured business, but the tag is your meal charges are already prefixed. That is an administered price. So if you see the percentage-wise per meal charge, it will never increase, but overall, the more number of premium trains or prepaid trains are introduced, our volume and revenue and profit will increase in absolute terms. Thanks.
Okay. And so second question would be, so you have also mentioned in the annual report that, in the mail express part, you are currently servicing around 440 on board and 702 through TSV, train side vending. So total you are servicing around 1,200 kind of number in mail express. Now if I look at railway board numbers on FY'23, the daily average train running, that is mail express, was around 4,000, and we were serving around 1,200 as of FY'24. So that is roughly 28% of the total market that we can serve. So is my understanding correct that right now there is very big room for us to, grow from 1,200 mail express train to which we are catering to around, let's say, 4,000 at peak capacity?
Very good question, Deepak. May I know from which city you are talking or where do you stay?
Sir, Chennai.
Chennai. So you must be aware that there are suburban trains running on to Chennai, and quite in large number at Mumbai, in Chennai and in Kolkata, Delhi, all the metros. So all these trains are not our customers, particularly mail express kind of thing. So if you see the number of trains, mail express trains, which are running for more than 12 hours, which are not overnight trains, because every passenger who comes to take a train, overnight train, they don't require services of railway or catering or from IRCTC. They only at most take the mineral water, PDW, you can say rain leaf. So So we have to eye for trains which are running for more than 12 hours and day trains. So those are our target groups. Okay. And accordingly, we are serving them.
And so that number would be how much? Means
that already we have given, na? 440 and 702. I will give the exact number will be sent to you. No problem. Okay. It is 440 and 702.
Okay. No, sir, I'm saying our total is 4,000, but as you explained, our total addressable trains is not 4,000.
1259. To be specific, 1259. As on date, 1259 trains, including prepaid trains, we are running. Services of IRCTC.
Okay, sir. And so one last question I had. So, sir, last time, Indian Railways, they took a food tariff hike in 2019. Prior to that, it was 2013. So, taking precedence from the past, every 6 or 7 years, there is a food tariff hike which comes. So, assuming, let's say, if it does comes in 2025 or 26, okay, how would our catering revenue growth trajectory change? Let's say, for example, for FY'24 to 27, if we were hypothetically building in, let's say, 15% CAGR in catering revenue growth, with this tariff hike, how can the growth trajectory change for catering revenue? Will it be 15 plus 5% or how would that change?
You see, generally, these are all hypothetical questions. When we say increase in the rate, it is always lagging behind in cost recovery. So, to my mind, our profit will in the average of that ratio only, between hovering around 14 to 20% only.
Okay. Thank you, sir. That was it from my side. Thanks a lot.
Thanks.
Thank you. We may remind all the participants that you may press star and 1 to ask a question. The next question is from the line of Madhu Chanda De from MC Pro. Please go ahead.
Yeah, I have one housekeeping question. If you could give me the breakup between the convenience and the non-convenience fees for internet ticketing for the quarter. I have one more question. Hello?
Just a moment. We have convenience fee in quarter 25. 125 is 224 crores and non-convenience fee is 224 crore is the convenience fee and 105 crore is non-convenience fee.
And the non-convenience fee was lower. You had mentioned something. If you could just come back again on that.
No. Convenience fee is 224 crore.
Yeah, I got that, sir.
Then what's your question?
Yeah. Can you hear me? Can you hear me?
Yeah, sure, Madhu. Please.
Yeah. So you mentioned something in your opening remark that some 12 crore reduction in non-convenience fee. If you could explain that a little bit, please. I missed that point.
No, actually, if you compare Q1 24 to Q1 25, as against 198 crore of convenience fee revenue, we have earned in Q1 25 224 crore. Similarly, in Q1 24, we earned 92 crores as non-convenience fee, which has increased to 105 crore in Q1 25.
Okay. And the number of tickets?
Just a moment, Madhu. If you compare our Q4 of 24 with Q1 25, there is a slight dip in non-convenience fee. From 118 crore, it is showing 1.05 crore. In this 118 crore, we have one-time exceptional earning of 12 crore from social media advertisement, which happened in the month of March because of declaration of elections.
Okay, got it.
That's
got
what
it.
I want to know.
Yeah. Thank you very much. Okay. So that was there in 12 crore was there in Q4, which is not there in Q1. Got that point. If you could just share the numbers of tickets sold in the quarter.
Yeah. You want daily average or you want complete?
No, I want the full for Q1. I mean the total.
125 is 11.81 crore.
11.81 crore for Q1 25.
As against Q1 24, 10.43 crore.
Okay, thank you very much, sir. And my last question is, of course, because of the very bad summer, the rail meal business has done well, extremely well. So what was the capacity utilization for rail meal?
Yeah, I am very happy to say that it increased from 73% to 86%, and that too when we added 3 more plants.
Okay.
During last.
So in terms of physical capacity, where does it stand now?
As the physical capacity, we have 17.68 lakh of bottles per day, and average of this quarter which we were producing is 14 lakhs plus per day, as against 12.5 lakh per day last year Q1.
And any more plans of capacity addition in the next couple of years?
Yeah, one plant of 72,000 bottles per day is getting commissioned in Vijayawada. Hopefully in the month of October we'll be able to do, hopefully.
Okay. Got it. Thanks a lot. All the best.
Ma'am, one question from this side.
Yes.
Hello. This is not only the summer. It is your organization and the people behind that. They have done marvelous job. That's why we could capture this much business. Thank you very much.
Thank you.
Thank you very much. The next question is from the line of Mohit Jain from Tara Capital Partners. Please go ahead.
Yeah, hi. Good morning. So my question is on catering segment. The margins there have been pretty volatile quarter over quarter. Can you help us with a steady state margin for this business? I think you mentioned 14 to 20% as a band, which is pretty wide. So what will cause such a big volatility in the catering margin? And secondly, there were some pending cases, I think, regarding previous tariff hike that was going on. What is the status for those of them? Thank you.
So far as first question is concerned, one hypothetical question was raised by someone. So I made a hypothetical reply that it may range from 14 to 20% if everything improved. As per the hypothetical question was asked. Generally, it is varying between 12 to 15%, depending upon which kind of services are introduced in higher number. And as we understand, as the government and railway, as I understand, are coming with more number of Vande Bharat type of trains, so we have a better chance of getting that business of prepaid and premium trains, where we can, in absolute term, we can earn more and grow more. Thanks. Second question, I just missed your second question. What's your question?
No, my second question was regarding the pending cases regarding previous tariff hike. Some of them, if I remember correctly, were still to be decided and were sub judice. What is the status of them?
You see, any matter which is sub judice, no comment should be made. This is what we have learned, so I will not make any comment. Thank you.
Understood. And just coming back to my first question, there is significant volatility quarter over quarter in the catering segment. Can you help us understand what drives this quarterly, volatility in the catering margins?
Yeah, you see, we are in seasonal business. So in not only catering margin, if you see my all segments, you will find a pattern. Pattern is depending upon season. Suppose in the last quarter, January to March, you are booking a ticket for say June, May, June, July, where your summer holidays are there. So if you see the pattern in the IT side, you will find that revenue is good, whereas in catering side, the revenue will grow in the June quarter. So that's how it happens. It's a seasonal business, you can say. If you see, you will find a pattern. If you want, I can draw and send it to you also.
No, fair enough. That's it from my side. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Jyoti Singh from Aryan Capital Markets Limited. Please go ahead.
Miss his name. What's his name?
Miss Jyoti Singh.
Thank you for the opportunity. So, two questions from my side. What is the capex guidance for the FY'25 we are targeting for the Rail Neer plant? And second is, what kind of growth and margin we are earning from the devotional trip train that we plan for the 11 days or 12 days for the specific location? On that, sir.
So, so far as Rail Neer is concerned, we have already planned additional capacity. Vijayawada plant is coming, and then we are in the process of identifying 2-3 more plants, and we have not yet decided the model. If we go for departmental model, certainly investment capex will be more. So this is regarding Rail Neer. We have under process of finalization. The final stage in Mysore and Varanasi, but not yet decided the models that we are discussing and taking the feasibility report. Your second question is the devotional trip. You see, what is our USP? We have two USPs. One is we are fit to take mass tourism, and second is we are known for running train tourist packages in a most reasonable price range. So we are not looking of increasing the margin per se, but volume will add to our margin in absolute terms. So devotional trip, we have two kinds of devotional trips. One which we get from state government, which we say that it's state there, and the other is Vande Bharat trains, Bharat Gaurav trains, where we design a product and sell in the market to a general masses and get the bookings. So in the first kind, the margin is good, and which compensates it is around 20%, and in the second category, it is 9 to 11%. Thanks.
Thank you, sir. And sir, just last question on the overall growth and margin side, what are the targets?
Target means the coming year?
Yes, sir.
So, you see, we are already, if you see our CAGR, our growth is 17.3% over 5 years. And if you see our CAGR of margin, that is net profit, is growing 21% CAGR. So hopefully we'll try to do, if not better than equal. Thank you very much.
Thank you, sir.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Vivek Rathi. Please go ahead.
Hello, sir. Hi. Thanks for giving me opportunity to ask the question. You mentioned that, if I got it right, during the initial part of the discussion, that there are 1 to 1219 trains which we are catering to. That's our customer, right? So any probable more trains which we can which will be able to serve? You mentioned that overnight trains are not really our customers. That's a problem. But apart from that, what are we looking at a probable market, let's say, where we're going to serve it? Because it looks like catering is coming out to be the dominant area. Hello?
It's a very good and pertinent question. And I missed your name, please.
It's Vivek Rathi, sir.
Vivek, you see how India is moving and how railway is moving. If we see that, we get our answer. First is, economy is booming. Secondly, the DFC is coming and sparing the line capacity for normal train running in the existing infrastructure. And thirdly, government is consistently investing into the infrastructure of railways. This year also they have planned to invest 2.6 lakh crores. So when everything which is indicating is towards adding more and more and more number of trains. And with the Vande Bharat technology being used and being populated, demand from everywhere is to run more and more trains, Vande Bharat trains. And this will certainly add to the business in which IRCTC is in. So I find that I can't give you number right now, but I can only give you good hope. Thank you. Regarding your second question, catering, we are, besides the normal catering business, we have also come into e-catering. And on our e-catering platform, we have more than 19 aggregators, including Zomato and Swiggy. And I'm happy to inform you that in that business also, we have grew both in terms of meals booked and the revenue earned. If you see the comparison of quarter 1 24 with quarter 1 of 25, there is an increase of around 35% in average meals per day booked, and 9% is a revenue growth on Q2Q basis. So this will certainly give us a good business. Thank you.
Thank you, sir. Thank you. One last follow-up question, sir. As another participant mentioned before this that 2019 was the last time we increased the catering prices. So any plans of increasing the prices over next few months or a year?
You see, this is decided by Railway Board, Ministry of Railway. So as the trend is there, we can only hope, but we can't give any confirm assurance.
Okay, thank you, sir. Thanks. It helps.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. We will wait for a moment while the question queue assembles. The next question is from the line of Kanchan Mangaonkar from Anvil Research. Please go ahead. Kanchan, your line is unmuted. You may go ahead with your question. Kanchan, your line is unmuted.
Sorry. So am I audible now?
Yes, you're audible.
So my question is regarding the number of trains. Can you please share the breakup of the 1259 trains? That is prepaid. How much was non-prepaid and DFC?
Sure, Kanchan. is 117 prepaid train, 440 mail express train, and 702 mail express where we run TSP. Mail express 440 with pantry. So it's 1259.
Okay, thank you. That's it. Thank you. Thank you for the answer.
Thank you.
Thank you.
Your question is answered, right?
Yes.
Again, a reminder. Participants who wish to ask questions, please press star and 1 on your phone. So there are no more questions. There's a question. The next question is from the line of Deepak from Sundaram Mutual Fund. Please go ahead. Deepak, your line is on speaking mode. Please go ahead with your question.
Yeah, am I audible now?
Yes, sir, you're audible.
Yes, Deepak.
Yeah, sir, I had one more question regarding non-convenience fee revenue portion. Means, let's say if I want to take a 2 to 3 year view of where that revenue can be and what are the steps are we taking to grow that non-convenience fee revenue within the internet ticketing segment?
You see, exact number I can't share even if I like, but if you see the past, 91 crore has increased to 105 crores. And we are trying our best to improve this further. Because as you add the numbers of tickets, which is happening, so the interest of your customers, your bankers and advertisers improves. So I'm very hopeful. Thank you very much.
Mr. Deepak, does that answer your question?
Yeah, it answered my question. Thanks.
Thank you. The next question is from the line of Kanchan Mangaonkar from Anvil Research. Please go ahead.
Yeah, sorry for the follow-up. Hello?
Yes, please.
So, you shared the breakup for this quarter. Can you please share the breakup for last year as well, for Q1 24?
We'll share you separately. Thank you.
Thank you. The next question is from the line of Vivek Rathi, an individual investor. Please go ahead.
Hello, hi. Thanks for the line again. Sir, you mentioned there were around 11 crore tickets booked this quarter, if I got it right. So can we get the revenue generated out of this ticket and then per ticket or total revenue?
You want to know the revenue for 11.81 crore tickets which we have booked? It's 224 crore.
224. Okay. Thank you, sir.
Thanks.
Thank you. The next question is from the line of Ashish, an individual investor. Please go ahead.
Hi, good morning, sir. My question is, am I audible?
Yes, Ashish. Very glad to talk to you.
My question is regarding the plans to grow the ticketing business for flights, buses, and of course hotels as well. So would the company be planning to grow revenues and business from these ticketing places?
Thank you for a good question. You see, there is an ample scope of giving flight services, hotel services to our reserved passengers. So, from here we can only grow, that much I can tell you. And we have certain plans to do it, which we can't share at the moment. But let it happen, you will know. Thank you very much.
Thank you, sir.
Thank you. The next question is from the line of Stuti from Prabhudas Lilladher. Please go ahead.
Yeah, hi sir. Just wanted to know the share of UPI transactions for the quarter.
is 45%. Last term, it was 37%. Thank you.
Okay, thank you, sir.
Thank you. The next question is from the line of Ratan Joneja from CoValue Technologies Private Limited. Please go ahead.
Hi. Thanks for the opportunity. I'd like to know what is the revenue from Vande Bharat trains this quarter. And my second question is, when do we plan to increase or bring at parity the UPI ticketing fees?
So, to my knowledge, we can give you separate figure also, but to my knowledge, information at the moment, 48 crore is the revenue in this quarter from Vande Bharat train. And so far as UPI is concerned, 12 crore is the figure for Vande Bharat train in this quarter. And this exact figure will share with you. And the second question which you wanted to know about the charges on UPI?
Yes. When do we bring it at parity?
Oh, what are you interested in? Should we improve the revenue or should we improve the charges?
No, we should. My question is.
What should we do?
Yeah, so others are charged 30 rupees. In UPI, you are charging 20 rupees. So my question is that when are you planning? Now it is already at 45%.
It's a very, very good question, Ratan. Let me tell you. When we were working with the UPI not giving this concession, we were earning only 78% of the business. Now we are doing 83% of the business of railway. And with UPI there, we are expected to grow further. So what do you suggest? What should the management should do?
So this is a 50% rise from 20 to 30.
No. You see, in absolute term we are growing. Just because UPI has permitted all the customers which were otherwise not coming to us, they are now booking tickets with us. The total number enhanced from 78% to 83%, and which with further growth of UPI numbers will likely to grow it further. So management has taken a call that to keep it like this and earn in the absolute number and volume. Thank you very much.
All right.
I hope that answers your question. The next question is from the line of Rahul Jain from Dolat Capital. Please go ahead. Mr. Rahul, your line is on unmute. You may go ahead with your question. Mr. Rahul, please go ahead with your question.
Hello.
Yes, sir, you're audible. Please.
Yeah, I'm audible. Yeah. Thanks for the opportunity. I just wanted to ask you that are we having any thought processes on price hike in the Rail Neer bottles, which is unchanged for like more than 12 years?
You see, our USP is selling affordable water to the railway passengers. If we don't do that, then we'll have to face competition with all other brands. So then ultimately we'll lose. So what we are trying to expand our capacity, make an efficient plant running, utilization should improve. So 73% to 86 or 87% utilization we have already brought. We are increasing our capacity and we want to sell at 15 only. Thank you very much.
Okay. So that answers my questions. Thank
you.
Thank you. The next question is from the line of Vivek Rathi, an individual investor. Please go ahead.
Hi. Sir, thanks again. So on the convenience fee, I wanted to ask, are we expecting any changes or this will continue as is? I mean, even with this Vande Bharat and number of things increasing, you're not expecting any change over?
No, it's irrespective of trains already fixed per class, AC and non-AC. That is continuing.
Okay. Thank you.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you, all our partners. I am Ravi Kumar, Director Catering Services, IRCTC. Thank you all for showing so much keenness and interest in the working of this company, of your company, and asking very pertinent questions, which will help all, not only us to perform much more better, and also the other shareholders to come into the more interest into IRCTC. Thanks a lot for sparing all your time and energy, and we hope your continued support will take us to the next level. We will continue to grow and make our company, which you are part of it, to the higher level. Thank you, one and all. On behalf of the management.
70.
Huh?
78. 72.7.
Thank you. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.